From your vantage point, what makes the younger investor different from, say, the investors of a certain age? Amy, I'm going to ask you first.
Well, I think the younger generations, they are digital natives, so they really prefer, for them, convenience is very important and a sense of bargain. And also, they like to invest in company that they believe in, so they have very strong morals, and they like to see sustainable growth. And also, company can grow from, as we say at Alger, exceptional small company, have the wherewithal, become exceptional large company. I think all those resonate with them.
Stephanie?
Yeah, I think that's a great point, and thanks for having us. I think that what's really interesting about younger generations is they're definitely consuming differently. I recently read a stat that 75% of Gen Z, and it's a close number for millennials too, are interested. They prefer purchasing sustainable brands, and a third of them are actually willing to pay more for those sustainable brands. 40% of Gen Zers prefer to socialize virtually, which blows my mind personally. And so I think all these ideas that younger generations actually consume differently, for us, that impacts companies, which impacts the stock market. So as investors, we should care about it. So it's this really interesting circle that as fundamental investors at Putnam, we think a lot about.
I'm so excited to start asking you about some ESG issues in a moment. But first, Steph, you are with a platform that is known for attracting younger investors. So what makes them different?
We've done a lot of research on our users, and I would agree with a lot of the points that were just made. We see actually from the user research we've done specifically on the Gen Z generation, for example, is that they feel like they're the smartest generation because they have access to so much more information than previous generations did. About 28% of them get their information from social media versus 10% of Gen X generation. So they do have access to a lot more than previous generations did, and they're using it to hopefully build wealth for a longer term.
So let's talk now about what they find attractive. And Stephanie from Putnam, we know, or we tend to think of them as being more socially conscious, and you invest with that ESG mandate. What do you find most resonant? Before, it seemed like it was the E. Is it also equally the S and the G now?
Yeah, great question. So the way that we think about investing in and running our sustainable portfolios at Putnam, I think aligns well with this idea that different ESG issues matter for different companies and likely for different investors too. So for example, as I was speaking about earlier, for a consumer company, we may pay attention to the idea that consumer companies that have more sustainable packaging or lower environmental footprint, that matters for the business fundamentals and probably matters for the end consumer too. For a healthcare company, we pay attention to, because we think it matters for the business, pricing philosophy, access to care. Are you actually saving lives, creating something innovative? And so I think that these E, S, and G issues matter to different extents differently across different companies, and the end investor is really aware of that. And so at Putnam, we take that kind of context-specific approach, and as active managers, we look at different companies on a one-by-one basis to understand what matters to those businesses, and therefore what ultimately matters to investors. So all of the above, and it depends, is the answer, I think.
And speaking of individual companies, Amy, you're constantly looking for those small and mid caps with an emphasis on innovation. And you were saying that you have been attracted to some of the companies that you find younger consumers are attracted to.
Yes, for example, Wingstop, which we think is really of course it's a chicken wing company, but it's really a technology company that sells chicken wings, and that really resonates with the younger generation because I think for them it's important to have a good bang for the buck, sense of bargain, and also Wingstop has been a cutting edge of innovation in terms of digital. They are 65% digital now. They want to go to 100%, and also delivery, as they are with both Uber Eats and a DoorDash. So that clearly, that's a brand that really I think is a quintessential millennial and Gen Z brand that will also be very sustainable over long term. The other company, for example, is Sprout Social, which is really a company that specializes in the social media software. As you know, millennial and Gen Z, as younger generation, being digital natives, they are really revolutionizing social media, and so that's very important. So important for companies to connect to this younger generation through Sprout Social.
Thank you. Steph Guild of Robinhood, as we were talking, your platform has attracted younger investors. Actually, I wanted to ask you some specifics about that. Do you have some numbers on the demographics, the average age, and how many new investors you added during the pandemic?
Yeah, we added, we ushered in a new generation of investors. We've got over 20 million investors on our platform. About a third of them are Gen Z, just under 40% are Millennial. We do have some Gen Xers too. Over 20% are Gen Xers.
For diversity, a few Gen Xers in there.
We do, I'm one. We do actually have quite a bit, a diverse set. Definitely errs on the younger side, which makes sense because it's a completely digital, easy to use platform. And we recently launched the Robinhood Investor Index to actually understand what they're investing in and why, and sort of track that over time and give them that same information, because everyone's always interested in what people like me are doing, not just me personally, but it's been extremely interesting because it resonates very well with what my panelists had said about what investors, younger investors, are interested in investing in.
As a follow-up question, we tend to think of younger people as being a little bit more fickle. So you had a lot of new accounts open during the pandemic, as basically every trading platform did. Have you been able to retain them?
Yeah, we have, I think it's something over, we still have over 20 million funded accounts, and something like 12, maybe over 10 million monthly active users. So we definitely have been able to retain them. They're invested. Obviously, this market environment has been a tougher one, but I do think that what we're seeing is our customers are learning from this and actually using opportunities to add to the positions they believe in with the market down.
Stephanie from Putnam, I believe that you mentioned earlier about how you interface with them, that they tend to find more information online digitally. How do they contact you, or are they? Are they never picking up a phone? Do you hear from your younger investors?
Sure. Steph might be better at answering this than I am, but our younger investors are interested in long-term investing, I think. As a portfolio manager, I don't have direct contact with our end customer as much as maybe I'd like sometimes. But I think what's really interesting about how the younger investor wants to communicate, I've heard that we don't like phone calls, and younger generation, we prefer emails or texts. But I think the idea is they do want constant kind of feedback on how portfolios are performing. But I think what's most interesting is, theoretically, a lot of younger investors have this long-term time horizon that they're interested in, and we hear that from clients. And I think that's so well aligned with some of these sustainability issues that they care about, that we've been talking about, often have these long time horizons over which they play out. And so as long-term investors, we're really focused on communicating to our clients and hearing back from them how those three kind of long-term elements are really well aligned.
Amy, I'd like to ask you the same question as far as interface. I know that all of you are very busy managing money and you don't exactly interface with all of your investors, but from your vantage point, what do you see that is different about how they want to communicate with you? Because they do ultimately choose each of you as a platform.
Yes, well, according to a recent Barron study, that stocks is still the preferred sort of investment option for younger generation investors. So I think, for our younger generation investors, that they will probably prefer more digital platform, but it's more important that they want to invest in company that they know and they like. So positive brand, and we really, at Alger, we really focus on sustainable long-term growth, and we invest in positive dynamic change. I think all those elements really resonate with them.
Stephanie, I want to ask a follow-up question to you about something that you brought up, which is the obvious. With a younger investor, they have the luxury and the benefit of a long timeline if they use it. So especially also with ESG, as you pointed out, it often takes patient capital. How do you think we can communicate or teach that new investor class the importance of patience?
Oh gosh, that's such a good question. I think, as Steph pointed out, the volatility we've seen over the past, not just months, but years, is in itself an important lesson. there's some discouraging stats about how with retail investors, we don't do a good enough job in our industry helping them stick with it through downsides. And there's too many investors that buy at the top and sell at the bottom. And so I think we can continue to communicate, and at Putnam we try to do this very much, the benefit of long-term investing. And companies and investors that have a long-term view often can compound growth. As you pointed out, a lot of these sustainability issues that we care about at Putnam, that our end clients care about, take some time to play out. And some of the greatest stocks are those that are steady compounders over time. I will say it's really, really hard to get trading and investing right over the short term. It's more interesting, I think personally, to try and have a time horizon edge or an analytical edge over the very long term. And so we try and just remind our clients of that. And I think they're seeing it throughout the volatility we've had over the past couple of years.
I would agree with that. We see it in our data. Our customers are investing in what they know and use every day. They also have a strong allocation to electric vehicles in all different formats. And they've been adding to these positions in this current time horizon. So maybe it's not working this year, but they have the time horizon that they need.
Can you share some more data with us? Because again, that idea that younger people might be fickle. This is also the first downturn. Are they going to pull their money and buy a video game? That's what older people might guess they would do. You're saying it's the opposite.
Yeah, we are seeing people adding into the top positions that they've been holding. Tesla is obviously one of them, but then there are other electric vehicle areas that they're adding to. They're adding to Apple and Amazon and the things that we all know and use every single day. And actually, what I sort of hear a lot is, I'm just not going to look at it. I'm just going to keep doing it. And we actually have something called recurring that allows you to just keep automatically adding to positions that you want to, which is, I think, a fantastic tool for times like this.
You are with Robinhood, so I do have to bring up something that I know everyone is thinking about, and that is the meme stock phenomenon, because a lot of that did play out on Robinhood. Do you think that this is something that's going to stick around? Will we keep seeing this, or is this a fad that is going to slowly die out?
I mean, it has certainly decreased in popularity. We've seen it in the data. AMC, however, and APE are part of our highest holdings, and so a generation of investors believes in that. That being said, I don't think the concept of investing in what you believe in and using it as almost a vote is something that necessarily will go away with the greatly increased access to investing. I think that is something that company CEOs will start to have to think about as like an entirely new investor base, perhaps, besides institutional. And
it is a way with voting with your dollars and also voting with your emotions and dollars. I'm going to hold off on asking you about crypto for just a moment, let you think about that, and I'm sure the audience is curious as well. I want to ask you that question similarly as far as voting or using your dollars with passion. I know that you've said that the kinds of companies that you think younger investors are looking for, do you think that they tend to say, I'm going to put money in not just for returns, but because I feel very strongly about something, whether it be a product that they love or maybe a point that they are trying to make?
Yeah, absolutely, because I think one thing they have in common with what we do at Alger for small mid-cap is really about being very futuristic, very long-term. And we're looking for a company when growth is not priced in, and a company that do good to the world, right? We invest in companies that save time, reduce cost, increase efficiency, and I think all those resonate with them. So for them, they absolutely want to invest in companies they, feel very positive on, and also they want to see those companies to grow, right? And can those companies to be around for a long time? And so to that extent, they are the ideal long-term investors, because they really looking at 5, 10 plus years, which is exactly what you will want to see, because small companies do not grow in a straight line, and we're looking for that sort of inflection point, and I think that resonates with them.
All right. I would like to encourage our audience in person or virtually, if you'd like to submit questions, I will try to get to them in the conversation. Stephanie from Putnam, question about ESG. Overall, for investors of all ages, this is something that is part of every conversation, not just funds that are specifically targeted to ESG. Every time we look at an individual company now, this comes into the conversation. And I want to ask you, are you finding that younger investors are getting into ESG funds at a higher percentage, or is it about the same for investors of all ages, including the older investors that have been investing in funds for decades but are now switching their money over?
It's a little bit of both. So 80% of Gen Z, and the number is slightly lower for millennials, are interested in incorporating ESG into their investment philosophy. And 70% is more than a little interested, so a lot interested, right? So I think that's interesting. And then to address your question though, Janet, more than half of all investors surveyed are interested in incorporating ESG. And so to me, this isn't just a young investor opportunity, it's an all investor opportunity. I think this makes a lot of sense. We see what's happening in the world. Energy security, company culture, retaining people, all of these are ESG issues that impact businesses. And if they impact businesses, then they impact stocks. And so as good investors, we should care about them. And so I think that this is a phenomenon that matters to all investors. And we've talked about using your dollars to vote on issues you care about. At Putnam, we're looking for that intersection of issues you care about and that also impact companies. And so we think there's a lot of businesses out there where leadership in these relevant sustainability issues can drive better company and then better fund performance ultimately. And lots of investors are interested in that outcome.
And I believe that I'm correct in that some of the funds that you are running, or at least your group, they were actually recast from general funds into ESG funds. That makes your work a lot more competitive because we are going to continue to see more and more ESG focused investment vehicles.
Yeah, so in 2018, Putnam transitioned two funds over to Putnam Sustainable Future and Putnam Sustainable Leaders, which are the two funds that I manage with my co-PM, Catherine Collins. And importantly, we didn't just change them in name, we completely turned over the funds. And so in practice and in spirit and in name, they
and
are
by vote too,
funds.
right?
By vote too, yeah,
it was
absolutely. And so that helped us start with some scale, which is important, but also they're completely different portfolios than they were prior to that. And I do think it helps us, yeah.
And this is a trend we're probably going to see across all investment houses and platforms, that more and more ESG vehicles will be created.
I think so. I'm a little bit biased, but I think absolutely. I think it matters for companies more and more. We've seen that through the pandemic. These issues are just rising in importance, and so we should be paying attention to them.
To people. People feel it in their wallets, the inflation, and especially gas prices. So electric vehicles should be the natural correlation to that.
I think we might be having a little bit of an issue with your mic, so I'm going to ask you to speak up. But I would, do you have any data on that from Robinhood? Are you seeing more investment dollars into ESG related companies? I think it's on.
It's on. Okay.
Oh.
It doesn't sound like it, but I can speak loudly. Yes, we are seeing a lot more dollars. Oh, there we go. There I am. A lot more dollars going into electric vehicles. The top stock in our index, for example, is Tesla. And then we've got NIO, PowerPlug, across the kind of supply chain, and even Rivian has been in there. So it's been an active space. I think as part of the index, I want to say something like 35% of it is in the electric vehicle space. And it's fully reflective of what our customers are owning. The way we built the index was based on something we call confidence, which essentially looks across people's portfolios and says how much as a percentage of your portfolio or account is held in that particular stock, and that's what drives the weight in the index. So it gives you a reflection of what people are investing in.
Can you remind us, how old is Robinhood now?
We've been around since 20, oh my gosh, this is, I think I want to say 2015.
Yeah. So we're talking about the younger investor, but this is almost like the toddler, the young kid platform. You've had to scale up a lot to keep up with the growing number of customers.
Yes, we have. We've grown the company by great leaps and bounds. We've added a lot of people over the time. Of course, we are regulated industry, so we've added a lot of legal and compliance folks as well.
So hard turn now. I told you I was going to bring this up. Everyone's curious about this. I have been as well, crypto. So we saw this asset class zooming, and then it took a hard crash. Can you give us any insights if this is still something that is attractive to the younger investor?
Yeah, we do. We are seeing a lot of attraction from investors. We recently added another coin. We've got 17 on our platform, but we are really careful about the coins that we add. Other competitors are over 50 on their platform. I would say that the one thing that, I didn't grow up with crypto, obviously. Most of us didn't. But as I've started working at Robinhood and learned more and more about it, I truly believe in the technology behind it. And so even if you don't want to invest in Bitcoin or Ethereum, I'm not sure I agreed with you, but I do really think that the technology is going to change the way financial transactions happen in the long term. And I think our customers understand that really well.
Amy, we've been talking on this panel a lot about the need for a strong stomach, patience, hanging in there. I just want to ask you specifically, since you look at small caps, mid caps, about dealing with volatility in this current market. I know it's become more challenging to find good investment ideas. And I just want you to give us some insight about how you are doing your day-to-day operation, how you are looking for these stocks, and also patience on your part as well as that of your investors.
Yeah, I think patience and tolerance very important for small cap investing because again, small companies do not grow in a straight line. We really look for those step function growth, and it could be extremely rewarding if we're there early and we're right, because we're really looking for company going up 2, 3, 4, 5, 10 times, more. Like we're very early investors of Shopify, and 4 years ago. So clearly, that's been extremely rewarding. But I think for us, it's very important to differentiate volatility from risk. And I always say we always use volatility as our friend, and buy low, sell high always works. I went to Columbia Business School, so just using Ben Graham's quote that over the short term, the market is a voting machine, and over the long term is a weighing machine. I think for the younger generation, they have time, right? Gen Z, Millennial. So I think that's like the ability to take a long-term view, especially in small mid-cap space, has given us an edge, and I think will give them an edge as well because they have that time horizon. But of course, at the end of the day, still at Alger, our edge is really about stock selection. So it's really about alpha generation, and it really comes down to unearth those companies early on their corporate life cycle and watch them grow. Sort of planting the seeds and eventually see garden of flowers blossoming.
Do you think that younger investors do have more of an appetite, even some of them enjoy more the idea of risk taking?
I think it's bifurcated. I mean, part of it they do, but as part of them, some of the investors are very skeptical of, risk taking. And so I think they want to invest in things they believe in and really sort of resonate with our investment philosophy. Again, we invest in companies that really do good to the world, right? Like we are very, focus on healthcare, technology, consumer. So all of those, and in healthcare particularly, for them is about having access to healthcare anytime, anywhere, including at home. Digital transformation is a really common thread for our investments, and I think that is a theme that they really care about.
So you are saying that your younger investors are equally interested in healthcare, which I think some people would find surprising.
Yes, that's a great point. I mean, it's different in the sense, clearly, for diagnostic tools, medical devices, the demographic is going to be more aging population, but healthcare is changing, right? It's really about value-based healthcare and getting healthcare and, again, having access to healthcare anytime, anywhere. And I think that's very important for the younger investors. And we invest in companies that cater to that as well.
Stephanie Dobson, we are running out of time, but I want to ask you that same question. We were already talking about patience, and you feel that a lot of your investors already, both the younger ones and those of a certain age, do understand the need for patience with capital. But do you feel, from your vantage point, that the younger investors do have a greater appetite for risk?
So I think we see it in, Steph brought this up, you see it in retail investors in general, that this cycle they've been more likely than in the past to be buying down markets, which I think is an indicator of what you're talking about. As active managers who those investors trust to manage their money, I think volatility, as Amy pointed out, is a really attractive environment for active investors. We get to reassess companies, meet with management teams, test our personal biases, test the fundamentals at often more attractive prices than we were able to in the past. And so I think that's a great opportunity. And as I mentioned, this long-term investment horizon, I think, is an edge that active managers can have. So. I think that, as the market focuses on a go-forward basis on more business fundamentals, and some of the macro noise maybe wanes to the background, I think it'll be really important to think about long-term earnings powers for businesses.
I have now a final question for each of you, and I'm actually going to have Steph answer last, since you do have more younger investors. So let me quickly go back to Amy. This final question is looking ahead. We're in our last few minutes, unfortunately, for the panel. Looking ahead, what can you guess that younger investors are going to demand? What are you going to have to provide more of for them? Your best assessment.
Again, I think whatever a company that address their issues, pain points, as we say, makes their life easier. Easy is very important for them. Easy access and confident convenience, very important, and also making them feel good. They want to invest in companies, positive brands that make them feel good about themselves.
And
I think that we talked a lot about these different ESG issues. I think we didn't talk a lot about S, which I think is rising in importance. And I think both for organizations like mine and then the companies we invest in, I think investors and customers are increasingly looking for companies to be putting their money where their mouth is from a people perspective. I think today that's even more important than we've seen in the past. Treating your employees well. As Amy pointed out, health's not just important to younger investors, but mental health is really important. How do businesses support their employees' mental health? And so I think all relevant ESG issues are going to matter more and more over time. But I would just like to highlight this hard to measure but really important S issue that I think are going to matter a lot, especially to younger investors, but hopefully to all investors.
And Steph, finally, you have a platform that you are directly interfacing with the younger investors, and you also have to service them for the investment services they are seeking. What can you tell us is your best guess looking forward that they are going to demand?
I think kind of building on what both my panelists said is the intersection of advice and kind of the old school way of giving advice was through getting an advisor and a human advisor. And I think there needs to be an intersection between that and digital platforms that doesn't quite exist today. And so I think our investors are no different than previous generations in that as you grow older and your life becomes more complicated, perhaps you have children, you have to take care of an older parent, your needs change, and so delivering those needs in an easy digital fashion through advice and financial planning, for example, I think will be a new frontier.
And again, how do you think that they're going to be interfacing with you? Is it going to be through the chat bot?
Chat is popular. It's becoming popular. Phone calls are more limited versus, phone calls are usually for an emergency. But there will be lots of different ways. I think most importantly is that they want to be able to carry it around in their phone, which is why we are mobile first, and be able to be there for them when they need us, but not necessarily push things to them constantly. Because I think, not just younger investors, but all investors can find that to be a little annoying. And so they want to be able to access it when they want it.
Thank you so much. I think you would agree that this panel flew by, and I really appreciate all of the insights they gave us today. Thank you again, Amy Zhang from Alger, Stephanie Dobson from Putnam, Steph Guild from Robinhood. Thank you so much.